Okay, so I'll be going through the time frame pairing of the 4 hour and the 1 hour. One thing I do want to mention before we get started is that the higher time frame pairings they have like different properties in the way that they work. So I just want you to keep in mind when we are explaining to write down some of the differences that we would use the lower time frame at the 15 minute, 5 minute, and so on. But nevertheless, one of the most confusing moments for traders is a large displacement move. Price moves aggressively and many traders freeze. The real question isn't whether price will rebalance, it's how deep price can retrace while still showing buying strength in this scenario. But if buying pressure fails, the setup is no longer valid. So we need to decipher where buying pressure is invalid. And this is where fundamentals step in. They determine whether displacement leads to a continuation or a retracement. So how we would get started is we would mark out where our POIs are. Where is our point of interest? If we see a massive displacement move, we want to see price use something as some sort of support for sellers to indicate the reversal. And when it comes to displacement moves, it indicates that price is moving aggressively, it's moving quickly, it's got somewhere to be, it's got buy side to take. However, if we were to look at this 4 hour time frame range that we have here, we see a massive sell-off here, but we haven't taken any sort of sell buy side liquidity within this on the 4 hour. So that's something I would pay attention to. So I would be looking at these highs, for example, this one and this one. Because as of now, price is just filling in the imbalance, and we have moved past the imbalance as we rejected it off the first chance. We have then swept the buy side and we've closed above it. So that then adds to a confluence that we could be disrespecting this range and pushing higher. But our focal point is this range here. So I'm going to mark out, if you would want to do this, you don't have to do this every time, but this would just be something to position my mind into where I don't want price to go. So one thing to mention, this I don't want to see price go here. I don't want to see price even look here or just even think about going here if buyers are still valid, because that would indicate to me that this buying range isn't as strong as it perceive perceives, I think that's the word, perceives to be. This range, however, it's a possibility. But when it comes to displacement moves and Fibonacci ranges, I don't really want to be entering that discounted pricing range, which is below the 50%. And I would be using, if I was to put a fib, I would be using this low because it was the low that took significant sell side. But I don't want to be piercing lower into this buy range. So for me, the perfect area would be this and even this in urgent cases of buyers wanting to move even quicker than expected. So what do we do then? We mark out everything within this area. Yeah. So what did I mark out? The 4 hour, I marked out this high, which was obviously a significant place in price, which was the highest place of resistance before the sell-off. But now we have disrespected this range. We want to use it on the inverse as some sort of support. But our video today is about time frame pairings. So where does the 1 hour come in? And to mention, what does mitigation look like for timeframes? So ideally, I want to see the 25%, 50%, and the 75% mitigated in some way. And that would be a body closure above and the wick going through it, classing as the mitigation. However, one thing about trading is you're not going to get the ideal every single day. And that's why the best traders are the best at adaptability, not at predicting. So in a scenario like this, where we don't get our ideal mitigation, where we have a body closure going straight through all of our levels, we now wait. What we would ideally be looking for is some sort of, as price has confirmed here, we get a body closure to the upside. So now that we understand that we have respected this range because we haven't closed outside of this, This leaves room for further mitigation after pushing higher. So one thing that I want you to write down and back test for a week if you can is engulfing candles. Engulfing candles can indicate how strong price is willing to move for the next couple candles, regardless of the of the time frame that you're on. And we don't get that in this scenario. So what's that telling me is that we could have some temporary buys to then give us the confirmation that buyers are still in this market. And one thing I would be looking for is a closure outside of this range. So you see this line here, I want to see a body closure outside, specifically on the 1 hour. So we wait for our confirmation. This is what I don't want to see. Of course, we get pricing above and then we close in range. So now, because I'm still waiting for buyers, I'm still going to wait for some sort of confirmation, because this could just be temporary buys as we get here. Now, that closure is exactly what I want, because it tells me that we haven't respected this range for sellers and that buyers are validating the setup. So what am I looking for here? Because we have this three candle sequence of bullish candles, and we haven't got our retrace yet, which we are looking for, and we have our confirmation disrespecting the range with the seller's intention, we have an internal range. So this adds perfect confluence. Well, I should say this adds to stacking confluences on top of each other, because remember, we are looking for one of these levels to be tapped. And a lot of you may be saying, hey, the 25% was. However, the 25% has a job in itself. If you want me to do a video on this alone, I can do that. Just put it in the comments, please, and I will do that. But I'm not going to mention that today. So I'm still looking for a mitigation of one of these three levels here. And in the same breath, a respect of my Fibonacci. So because this is the 1 hour, I need to see a mitigation. And just like that would have been exactly what I needed. After seeing the lower time frame, probably on the 15-minute, or in urgent cases, the 5-minute, go to that 75%, I could either be catching my entry within the bullish setup of this wick, or I could wait for this candle to form and then find my entry from here, because we could get a retrace back into this range as we achieve the most premium price within this quarters. So that means that we could see on the next hour a retrace to the 50% or the 25% to then push. So now getting into the details of details. This is the lower time frame, the 15-minute and the 5-minute specifically. One thing to mention is that when it comes to the lower time frame, a lot of the price action matters. So you do need to be able to understand what is going on specifically before you go even lower. So this is what I'm going to explain here. So we have the 15-minute. And we did get a push higher. So to start here, we get a push higher and then we get an aggressive sell down. However, as you can see, we test the wicks here, and this would class as a fail of a break of structure. And that's an indication that sellers aren't strong. So here, sellers faked everyone to thinking that there was some sort of selling pressure, offering them an imbalance as an entry to get in as well. But look at how we enter, we mitigate, and then we fail to create any sort of aggressiveness to the downside and push through as we do. So then I mark out this aggressive sell as an order block as soon as we close above it. One thing as well is we have this buy side liquidity, and this was used as resistance for quite a while until we get to here. So now that we have the confirmation that we have a closure above a significant high because it was the resistance, now we have the confirmation that buyers are stepping into the market and they are making their entrance. But one thing buyers are going to want to do is take out any early buyers as a trap for people, well, for traders thinking that is actually a sell model appearing. In reality, they're just taking out every early buyer that got in. So what does that mean? We mark out sell side liquidity. So we are looking for sell side to be taken before we get our move. And we have marked out this red box as the significant area. We do get two mitigations, one being there and two being there. So we are looking to use this order block as well, sweeping this sell side liquidity and respecting, hopefully, this fair value gap. So now go down to the 5 minute, and it's all about understanding price action again. So we go down, we have an internal low taken as well. So that's buy side, sell side in itself. Price could just go up from here. That's not what we are looking for. We want a nice mitigation in our order block, which we get there. Further taking another sell side liquidity that was engineered. Now, what's going to be our focal point? So now we need to see where price looks significant, but it needs to be quite close to where we are. So one thing I'm going to mark out is this wick here. Let me make it a different color, sorry. Let me take that away. I'm going to mark out this wick, and I'm going to actually put it into quarters. So we did get, just to clarify, we did get our order block pierced through. We did take our sell side, and we have used the support level. Now, one thing I truly want to explain is we have a three mitigations of this support level, this fair value gap. Now, one thing I really want to get into your head is that, remember, if this fair value gap is our POI, we have now used it three times, meaning that buyers have tried three times to use this as support to push higher. Now that means that this area has completely being weak is completely being weakened, and the more we come back to it, the more likely we are to go through it. So now that we do have some sort of buy strength that we are reversing off of, we don't want to see a return back because it's probably an indication that we are going through it. So we didn't get that mitigation of our 50%, which is completely fine. With the lower time frame, a lot more is plausible, but a lot more needs to happen for confirmation. We have disrespected the 50%. So now I want to use the 50% as some sort of inverse use to then push higher. But um I want some more confirmation. One thing as well is that we did have this level of resistance. And why am I pointing that one out specifically is because you can see that we have this head and shoulders pattern here, this being the left shoulder head, and then we are expecting the right shoulder to form around this area. So if I don't want this to be tapped again, this needs to hold. So I want one more confirmation. Let's see what we get. Not really. I don't really like that because we're reversing off of this. There it is. So although we have closed in range, we have disrespected this support level. We've respected the 50% of the wick. So now I'm going to get in aggressive, which is more like it's more plausible. Like it's okay to do that on the lower time frame. Um, but with this, I need my stop loss to cover anything below. So I'm going to do a 35 pip stop, which is okay for my risk management plan. Let me just make sure that's 50. Yeah, okay, that's around 35 pips. And we can target buy side liquidity. Let's just target the high. Why not? That is a 80 pip trade. We could even do it to, let's keep it. Yeah, let's keep it. No, let's keep it. Let's keep it. And we eventually get in on the next candle. We get another retrace lower. This is all plausible. Lovely push. Push lower again. We're still in. It's good that we know our risk plan works. And then a further push higher. TP hit, and that is what it is. Now, I didn't do an entry on the 4 hour and 1 hour time frame pairing because you shouldn't be taking entries on that time frame.